The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome back here to the Diagnostic Trading Hour. My name is Darrell Martin. I'm your host here on TFNN.com. Also available at TFNN.mobi on your mobile phone and coming to you live inside the e-signal platform now. Let's go ahead and check out where markets are trading at right now. We got some bulls taking charge. We have the S&P right now is up 23 points. Spider is up 2. We have the Russell is currently up 18. And, you know, looking strong just across the board there. NASDAQ right now up 70 points on the day. It has been just full throttle, just going. I mean, it's just been a perfect. I mean, really, you cannot really get much more of a perfect trend. And let me just pull that up and show it to you. I mean, this is all morning. I mean, just a beautiful, perfect trend. Hopefully, you were taking advantage of that because it wasn't exactly a hard one to join in on or stay in on at all. I mean, it just sort of went from flat to, oh, the market's open, let's go. And then, of course, does this little peaks, which, by the way, every time this thing dips down, that's another entry opportunity. And, I mean, just popping up, 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 up. So now where are we at? Well, we're at 1.5 deviations on this. That's obviously way beyond the normal expectations of movement. And we had a little bit of a pullback last night, so that's even further than we would expect it to go. And we can go back, we can look how far down did we go. Didn't quite go down a full half deviation. It's almost a 2 deviation move, which is around a 97% probability of full move expectation on a given day. So understanding that, tighten your stops, okay? You know, maybe take your profits and potentially look for a reversal, but this thing doesn't look like it just wants to turn around. But if it does, okay, which is what I'm looking for, at this point, I mean, if this thing actually can turn around and drop below about 45.20 right there, then I'm looking for it to start heading south, because once we drop below this first area right here, this first little 45.20 area, I mean, there's a whole lot of stops to take out, okay? And so just so you know, give you a little idea of what I'm looking at. And, you know, if you go and look at that 50% mark, you can go in, you can, you know, you put a Fibonacci on there, whatever kind of trading system you use, I'm sure you have access to that. And so if I go in here and add on just you know, drawing tool, let's see here. You know, I'll just do it quicker without the drawing tool at the moment. But you can go in, go to the drawing tools, go down here, and F8 right there. That's going to be my Fibonacci retracement. So I can go back and I can sort of get it right to where I want it to. And I'm not really going to worry about this first little leg, but I'm going to look at the recent leg before it really took off, okay? And so give me an idea of, you know, where's that thing going to be heading? And I'm not as big of a fig trader as a lot of people are out there, but there's, you know, this is golden ratio, GAN, fib, everything all combined. The one number I like, and as you can tell, I have my fibs preset already to show me that one number that I do care about, and that's that 50% marker. And it so happens that it lines up within a few points of a 1 deviation. So if we're pulling back to that level, would not really be a difficult thing for the market to do on that. So makes sense right there. It's going to go back to another point of oscillation. We can see the market did oscillate right there, right when it hit 45.02. So right in that area is where we should expect it to, if it does come on back down, which it looks like I said, I think it is getting ready to do so. I'm not going to jump in on it. I'm going to make it prove itself first. But let's see, try to widen this out a little bit. I know it gets a little bit messy if you're not used to staring at everything. There we go. Anyway, so we're starting to pull on back down. I'm looking forward to pull back down a few more points and really prove that this thing's over. But we're starting to get a lot of chop showing up in here. chop bread going on. So, the order flow is starting to, stack up in our favor the other direction. And want to see, where is that going to go? So, there's a couple, ways that we can trade this, but that is one of the methods. And I just want to be able to, help you see that and see, what the possible trade is. Now, how can we take advantage of that trade? We're going to just dive right into it. If we want to go over here and we wanted to trade this, then what would we do if we wanted to go short on it? What are some of the possible setups? Well, obviously you have just, we can keep it really simple. You can go short on the futures. So that's really easy. Is there anything we can do on Nadex? If we thought that this was going to be a trade that was going to happen, we thought it was going to move on down. Okay, so if we go over here and shrink this a little bit and push it on up there, back it out. Okay, put down a little bit more. Let's refocus it. There we go. Then, we're basically targeting that 4,500. That's a good 26-point move. And we still got a good chunk of the day left to do it. So, like I said, I don't want to jump in on it too soon because markets have a tendency to surprise you. Okay. And we don't want to let it sort of throw us off guard there. But what we can do is look at, are there any spreads that would be useful? Okay. And are there, possibly any binaries that would be useful if there aren't any spreads? So let's pull up the US Tech and let's just see what is out there among all the contracts that are available. And I'll pull that over here. Give me 1 second. And just try to separate that window. Oh, I think I have it. There we go. Okay. So looking at the US Tech right here with all the spreads on it. And I'm going, what are my potential choices? Because this thing has went up, and it's maxed out every spread. What's going to be really important here is for me to check out proximity. This is going to be my big key, okay? Looking at end of day, the highest we went on any of these things was 44.90. Okay, again, the highest, people will see that big profit, and man, they want to be all over it, okay? 44.90. I'm looking at a move to around 4,500. So that has no value to me. I don't care if I'm only risking $4. Okay, it's at this point it's a lottery ticket in my mind because I don't expect it to go that low. Okay, so once I understand that, that'll help me from saving by spending any money on contracts that really have no value to me. So now what does that leave me with? Well, now I have a 1 o'clock and a 2 o'clock, and at the end of the hour I'll have 3 o'clock contracts as well that I can check out. So if I'm going to choose one of those contracts, which one would I choose and why? Okay, well, all these contracts are 10 points wide, 20 to 30, 15 to 25, 10 to 20, 25 to 35, 20 to 30. Okay, on down the list there. So all of them are that wide. And so I can look at these two contracts on the buy and on the sell side. So I'm going to make an update on that so we don't have the buy side versus both. But that'll throw you for a loop. Okay. So if we're looking at those two contracts right there, then the next piece would be, okay, what can I do to potentially have the best, payout on these contracts? And the best thing I can do, if I get rid of that one, there we go, make it a little bit easier. That's a buy or sell of either one of these. They're the exact same thing. So there, yeah, right there. But looking at these contracts and going, okay, where's the real profit? What can I do with it? Well, I want that one that's going to be at the market unless I'm really just expecting a fast, big move. Okay. And by at the market, I mean has a close proximity. All right. Now, there is one other choice over here. There's this one right here. It's 45. I can sell it at 45.28. Okay. So if I really think I'm at the high, this is one way to play this. A lot of people are used to doing like in the money binaries, right? Well, I could sell this 3 points higher than where the market is right now to collect that 3 points of premium. It's almost all premium because the market's sitting right there at the floor. And then if it moves up, you know, yes, I'll lose some of that premium, but I'll lose it slowly overall. So one example I want to give you on how to trade this. So we're going to check this out. And this will basically run for the next hour and 43 minutes. But if we think we're at the high and we're going to oscillate between the high and that or break down, well, then this trade right here is the best way to collect premium. Okay. So we can be looking at that contract as our premium collection trade right over here. All right. And again, you know, as we put the pieces together on that, and again, not the lower one, this one right there we go. Okay, I want to get the right one on there. So if I'm able to sell that one, trying to get the price to pop back up for me. And that could definitely be, there we go. All right, Nadex was giving me a little fit there for a second. Okay. So we got right there, we're basically risking 35 to make 65, and we're at the floor on the indicative itself. Okay, so again, we're at the floor on the indicative itself, and we can collect about 30 bucks in potential premium. So that is one way to do the trade. All right. Now, I'm holding off on it because what did I say at the very beginning of the show? I'd really like it to break on down a little bit. And but that is the trade. Like, I'd open that ticket up. I have it sitting there on the side. It's ready to go, okay, for when I'm ready to take that trade. And I'd like it to be almost all premium that thing's into the floor. You can see that it really, the price is not moving. It's stuck right there. So I can give it a little bit to let me collect that. Now, if it's moving on down, and what I want to do is I want to think, how do I put this? I want to, let's say I think I want to get in when it moves on down to, you know, down to 45.24 over here, which I know we got really close to already. But we're breaking that. If I want to wait till it got down to, let's just say 45.20. Well, if it gets down to 45.20, it's going to be in the middle of this spread, bottom of this spread. So this will become my premium collection trade. This would become my at-the-money market trade. So I can think ahead, okay? And we'll talk about why we're looking at this expiration versus this one when we get back from this break. Stay right there.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direxion shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direxion shares gives you the tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a prospectus or summary prospectus, please contact Direxion shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're back here to the Diagnostic Trading Hour. And so we're going through, we're just looking at, some of the different spreads that can be taken that you can take advantage of in your trades. And so one of the things we're talking about here is looking at, as the market right now, like I said, we're waiting on it to break down. But if we can get that breakdown, if we get that solid break below 45.20, we got to be thinking ahead. What contract am I going to choose? So where the market's at right now, your actual at-the-money contract is 45.25 to 45.35, okay? As it moves down, if it's at 45.25, this 45.20 to 45.30 would be your at-the-money contract, okay? And then if it continued moving it down, 45.15 to 45.25 would be your at-the-money contract. So basically, I look at what is the price I want it to be at when I want to get in. So if I want to be in at like 45.20, okay? So when the market comes down to say 45.20 is but what I'm looking at as being sort of a breaking point as the market is actually starting to head south off this big run up, then I go, okay, well, what contract is that price in the middle of? And so I just look down them, and I got basically two choices right there, okay? I got this 45.10 to 45.20. That's going to put me at the top. That's not going to work. So 45.15 to 45.25 are really the two contracts that I currently have that I can do trades on, that I know if it's at 45.20, it will be in the middle of those contracts. So that being said, okay, what is the best way for me then to take, advantage of those trades and put it on. And then, you're only going to get a few points of movement before it slows down on you. Okay. So you're only talking this is more like a $30 scalp trade. Unless you just want to hold it or you're really close. If you're really close to expiration, okay, then that proximity will come way down. The premium will come out. Okay. And you'll be able to get, the trade on over there. But that's, just sort of the summary for you of, I want you to think about, in advance. And I think this is the biggest mistake I see a lot of traders make on trading Nadex is they don't think in advance of what contract is it that they actually want to use to go, to put their trade on. They scramble to try to find one after the fact. So if I'm looking at this, I'm like, okay, if it gets down to this price, I'm going to go short. So if that happens and you're going to go short, then what contract would I choose? And then I have, obviously the 415s are, as much as that big profit looks nice, they don't really make anything till they get all the way down to 44.90. Not even a profit goal of mine right now. Okay, not a target at the moment. If it starts really falling down, we get in that territory, hey, I may check some of them out, okay? But at the moment, really no target. So I got 1 o'clock and I got 2 o'clock. So and if that happens before the next 30 minutes, because in about 30 minutes or so, we're going to have 3 o'clock, then I got to choose between these two. Do I want time or do I not want time? And unless I am collecting, if I'm collecting premium, the shorter the time, the better, okay? Meaning if I'm selling higher, if I'm selling the spread higher than where the market's currently trading, then by all means, I want as little time as possible. Okay? So, but if I'm buying it, okay, again, if I'm buying it, I'm sorry, if I'm selling it higher than the market, then I want as little time as possible. But if I'm paying premium, that's what I mean by buying. If I'm paying premium, then I want as much time as possible. And ideally as much reward as possible, but at least as much time as possible on the trade. Okay, so that sort of makes sense. If I'm going to take on that risk of time decay instead of take on the collection of time decay, then I want to have as much time as possible to allow that time decay to slowly burn and the market potentially move to make me a nice profit on the trade that I'm putting in. Okay, so as you learn that, as you learn just to think ahead and go, okay, more time if I'm paying premium, less time if I'm collecting it. When sometimes it's not an option, but when it is an option, that's what I'll be looking at. Now, there is premium collection on the buy side. So if you think we're stuck in the zone right now, if you think we're going to be bouncing between 25 and 35 and all that, there are contracts on here right now where you can go and you can buy this, 2 points lower than the market. This one right here is a few points lower than the market, 2.5 points lower. So, you can be collecting premium during these little flat shop zones, going and grab 20, 30 bucks just over and over and over again. Not a bad way to trade them either. There's a lot of ways to trade these. People are so stuck on the binary, sometimes they forget about the spreads and how much more premium is in there and how much safer it is. We'll talk about that safety margin here in a second when we get back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. And so we're going through and we're just checking out everything on the market. Let's see here. We're going through and trying to figure out basically what the best trade would be if the market reverses. Obviously, the longs are hopefully it'd be pretty easy for you because down here we had some good. We remember we wanted the time. We were paying the premium before, and now we're actually collecting it on the buy side. It's actually not that horrible. You're almost collecting 30% of the actual value in the trade, buying at 45.31.5 if you were going long. A little late on that long entry, though, so I'd be cautious on that. But if we do get that turnaround, be always, and I guess this is maybe one of the stressful things I sort of want to, or one of the things I want to stress, is always be looking for a long and a short, okay? Always be looking for a long and for a short. And meaning what that does for me is it helps me not get stuck in that mindset of, you know, this, like, what do I think the market is going to do? Okay, you know what I'm talking about, right? So we've all been there and sort of having that mindset of like, you know, I know what the market's going to do. I have this idea of what the market's going to do. Trying to stay away from that and really go in there and take advantage of what the market is doing. and being prepared for what the market's going to do next. So if I think it's going to go long, great. What's the best contract for me to go long? But I need to consider what would have to happen on my chart for it to go short, and what would be the best contract for me to choose if I were to go short. And that way I'm always prepared. It keeps me out of that opinion mindset where I get stuck on thinking that, oh, this is what it's going to do every time, and I think I just know the answer to the question. And I've seen so many traders get caught up in that, trap of what they think is going to happen, that they sort of put everything into those trades, and they miss out. They're like, I always miss out. The market's always moving too fast. It's too fast for me, and I can't get it. And they feel like everything's moving too fast for them, when really the issue is they're simply trying to have a bias in the market, so their mind isn't even open to possibly going the other way because they don't want to lose. Which I get it. None of us want to lose. Okay? That's not in any of our vocabularies, right? None of us want to lose. But the where you're going to lose the most is if you don't go in and actually do something about it. Okay? If you don't think about your trade and go, how, if this were to go against me, one, I may end up getting out and profiting, okay? But if it were to go against me, what, why don't I go with it? And sort of the, trend is your friend until it's not type thing. And so always be ready for that trend to hop the other direction, and you'll be amazed if you start doing that, how many trades you'll start picking up left and right. And how much more prepared you're going to feel on the trades that you do make. Don't just be sitting there hoping that one day the market's finally going to catch up and do exactly what you've been hoping that it would do for a long time. Just be ready for it, hop in on it. When it's moving, grab it, take advantage of it, and, just keep going. And I mean, there could be some pretty, big premiums. There can be little premiums. There could be, a lot of risk or a little risk. And I'm trying to see here on this. We got 44.22. Oh, that's why there's so little risk, because it's still at 25. Be aware of your proximities. One thing I'm putting proximities here on the scanner. It's a new one I'm working on. But I'm quoting proximities in the underlying markets. That's 26 NASDAQ ticks away. That's a lot of movement going in the other direction for a trade. And we're getting right down now. We're getting right down to starting to break through some pretty good support levels on that trend line. We're sitting right at that trend line. And if it can bust where it's at right now, you can sort of see every little line I got going on over here. If it can bust through, pardon me, then we actually may have a short. So we were looking at a short down at like 45.20. And, of course, I'd still love to see that level hit, but we may be able to get in some trades before then. Go and hop in short. I could look at 45.20 to 45.30 right now. That would put me at a really low-risk current one for, a nice little quick move on here. I could also go in and, look at if I want a little bit more time on the trade. There's a 45.20 to 45.30 down here. And don't really put up that much more money. This is okay, here's a good lesson. I'm trying to just look at some live lessons to help you pick some stuff up. So, when it, let's say it breaks down through this bottom little support line over here. Let's say you wanted to go short on that trade. Then, what would be the setup? How could you take advantage of it? And I think right now it's just pulling up and grabbing some people at the last minute before it drops. We'll see. But ways that you can take advantage of it over here. I mean, this is, $21 risk. That's $32 risk. Okay, there's, $10 to $13 additional risk. You get an entire hour for the trade to move. There's only about 5 additional ticks of proximity on it. Okay, so, and so I mean that obviously, if you're going to go short, and we're right at 45.30, and you are selling a little bit lower, like a point lower, 45.26. So you got to look at your whole risk reward. You're basically, you wouldn't really need to stop on this trade. 45.26.4. The issue on this trade is it may run out before you make money. Okay, so depending upon where you got in at, it's going to have to really finish lower than where you entered. So if you entered, say, 45.28 and it expires at 45.29, you'd actually be down on that trade. So There's just, a little bit of premium built in across the trade overall. And but it looks like it's pretty weak. I mean, it's sort of popping down. It's hit right on all these support levels. It's got to break through there. We're picking up with some volume. If you check this volume out, our volume is increasing as it's going, and still got to break through. It's not just some massive amount of contracts. Still got to break through, but we can back up, and we can see. This is a pretty high volume compared to what we've had throughout the day. And it sort of, this last run up here, sort of like, it popped up with some decent volume, but that volume actually increased as it started coming back down. So whereas over here, we see the volume increasing as it's going up, and then volume's increasing as it's going up, and again, volume increasing as it's going up. And on this one, we saw the volume actually, it increased a little bit as it was going up, but then actually increased more as it started heading back down south. So it looks like we're ready to potentially drop on back down. And so what you want to be doing, if you're long already, you're trailing, and you got to have a pretty tight stop right there around 45.27, which is sort of where I would have a stop out if I was still long in this trade. But the next thing is, if I want to take advantage and go short, or maybe you just want to, enjoy your day off and go to the park because you just made a crap load of money if you took this thing this morning and you just rocked about 50 plus points. But, if you're going to go ahead and go short, or you just woke up, or you're just trying to figure out how to do things, you just log down, you just set in front of your charts. Well, now you can look at a couple possibilities. This one only has 17 minutes left on it. So we're going to need to see the market really move for there to be a lot of value in there for you. This one gives you a little bit more time on that trade. And into the ceiling, it's not too bad. I mean, it's right at where the market's at. So, you're risking a few dollars on the trade. If you go down here, it's got to move a lot. It's got to move 27, 28 NASDAQ ticks in quarters. So 28 quarters. And so if we go and look at that, 28 divided by, 4 is going to be a lot. But it's going to be about, 5, 6, 7 points. So 7 points of movement before you're really even starting to come near where you sold at 45.22. So that trade to me would be out of the question. This one actually has a possibility. This one is going to go positive premium here in just a moment. And it's, there it is. So now it's like $6 a premium already in favor. So the trades that I've liked on this, I've looked at these 3 contracts as sort of being what I'd say would be my favorite contracts to take a short on this at the moment. That's the 45.20, 45.30. Okay. So you got a low risk. You don't have a lot of time, but if you think it's about to break down, it's a good trade. Okay. And like I said, on a tight risk of about $30. You got a 45.20, 45.30, maybe a little bit better trade, honestly. You're giving up $10, about a point in value there, but you are also giving yourself an hour and 16 minutes, okay, for that trade to work out. So basically you have a little more time where you can make more money. And then if you're going to go on the premium collection side, you got the 45.25 to 45.35, because that thing's sitting like right in the middle. You're able to sell it at 45.29, and market's basically sitting at 45.28. So you're selling a point higher than where the market's at. And the one thing I do want you to notice is we ruled out all of these contracts because they're way too low. We ruled out this contract because it's too low, this contract because it's too low, this contract because it's too low. So there's only 3 contracts that I'm even interested in trying to make some money on doing these trades. And if you can get that concept down, if you can lock that in and go, okay, those are the only 3 contracts that are even really worth me putting my money on, then you're starting to get spreads, and you're actually going to start having some fun putting these trades on and making some money doing them, okay? So, but yeah, there are some good shorts. Right now, like I said, we popped up and we came on back down. And so as far as like shorting for, some quick scalps, I mean, definitely this is a place to go for it. And not necessarily going to be our big money running trades, but they are trades nevertheless that we can take advantage of. Now, what about on the binary side? Okay. So let's say we go back on over to the binary side. Then what can we find on the NASDAQ? Let's pull that up. Let's try to give ourselves, a few possibilities. What's better? What's worse? And And let's see here. Let me drop that off. Pull this up. And we'll check these out, okay? Okay, so on the binary side, if we thought it was going to go down about 4,500, then we can go down here. If we thought that, I mean, that's sort of our target, we said based on a 50% retracement, okay? Then, first thing I'm going to do is I'm going to go to as much time as possible, okay? But we don't have a 4,500, which is sort of funny because it blew so far past it. We have a 44.92 for like $5, okay? We have 2 o'clock at 45.01. I would not do that. I think that'd be a waste of money. Okay. So it's just, you only have an hour and 13 minutes, and I think it may take, I could be wrong, but I think it may take till the end of the day to drift on down to that nice round number of 4,500. So I wouldn't quite be all happy about hopping in on that. And obviously the one that's expiring soon has little to no value to me. Let's get rid of some of these contracts. Let's say we only want to look at the sell side. So we only want to look at out of the monies at the moment. We can actually, we'll look at it in the monies as well for just a little bit. Yeah, let's do that just for a minute. Okay, just looking at sell side, get some stuff off the screen. And let's see here. Let's get rid of all the stuff that doesn't have bid and offers on both sides. There we go. That'll get rid of a lot of contracts. Just all that noise. Okay. Now, earlier we were looking at a trade for like a $30 premium. And so if I could actually make $30, which means if I'm selling a contract, I'd be selling it for about $70. Okay. So like right around, this price level right here, that's about 20, got 40 there. And that'd be the max profit. Let's go on the in the money side up to here. Okay. Then I can sell at about 45.30 and I can make about $20. Okay. What about over here? I can make $20 selling at 45.29. Okay, so let's just compare those. I mean, this is a pretty sweet comparison right here for you on Premium Collection itself. And let me see if I can maybe grab. There we go. If I can grab that screenshot. If I can, then this will be, like I said, it'll be a really good example to sort of show you Premium Collection on spreads versus binary contracts. Let me try to grab a few of these. But, okay. So we got that right there. And what I want you to take a notice of, well, you know what? We'll talk about when we get back. Hopefully it'll still be there. Stay right there.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. So we are starting to get some of that pullback and hopping in on some of these trades to take advantage of them. Hopefully you're doing the same thing. We got some of these short contracts on right now, so we'll be following them through. Only got a few minutes left, 5 minutes left on this one, and so going pretty well on these U.S. tech short positions. Now, the one thing that I really want you to look at on here is the premium. You know, we're talking about premium collection. Right here we have a premium collection trade, and it's all set up. And so I'm going to take one more screenshot of this because it actually has a little value in it. But we want to look at what's at the exact same expiration. So 2 o'clock, selling at 45.28.3. Okay, so there's your 45.29. That's about as close as we're going to get at the moment. It was at 28 a little bit earlier. But 45.29, it's actually higher, a higher strike. Okay. But what I want you to see on this premium collection is which one is actually a better trade. Everybody thinks, oh, I'm going to collect premium on binaries. That's where it's all at. Or is it? Okay. We go in here. We can make $30 on this trade. We can make about $30 on this trade. Okay. So very, very similar in pricing there. So we got very similar pricing. Okay. We're making $30 on both of them. Actually, now we're making a little more on this one right here. And again, I'm comparing the two that are in green. So to sort of trying to line those up side by side for you like that. Okay. Look at this. If you'll get what I'm saying, this is like a whole new world for you if you've been a Nadex trader for a while. And you've been doing all these butterflies and all these end-the-money trades and everything else. Okay. Look at the premium on the contracts. You're talking about $30 there and pretty much $30 there. You're deep in the money, so it's pure premium on the spread. And I mean, what happens if? Now, here's what I want you to get. What happens if this contract? Okay, what happens if this contract over here? What if it expires at 45.29.1? How is that going to impact you? Okay, you're going to lose $68 on the binary contract. Okay, you're going to lose $68 on the binary contract. What's going to happen if that happens on the spread? If you sold at 45.28.3 or whatever, and it expired at 45.29.1, you lose $8. What if it expired to where it was at right now and it just stayed flat? You'd make all $30. Okay? So instead of risking $80 to make $30, or sorry, $70 to make $30, and it looks the same. I mean, the graph almost looks the exact same. 68 by, 32. Right? So 68 by 32, it's like, wow. If the graph almost looks the exact same on your risk-reward graph there, this is all or nothing on that extra tick. This is $1 a tick on that extra tick. If you'll pick this up, it'll blow your mind, and you'll start to see why I love this spread so much more. All right, y'all have a great day, and I'll see you tomorrow morning here on the Bull Bear Binary Option Hour.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.